Hey there traders and investors, welcome back to the channel. The S&P 500 finished the day basically where it opened after a pretty good size gap down, closing the day down $3.71 or 0.70%. The market was unable to fill the gap that was created with today's gap down and was only able to claw back less than half of the day's gap down before finding more sellers at the 527 level. The last 20 minutes of the day saw aggressive selling with the SPY printing new lows for the day and continued selling after the close post-market breaching the lows of the bearish engulfing candle that printed last week on high volume, thereby confirming a bear flag. As I mentioned in my last video, should the S&P 500 see price slip past the lows printed from last week's bearish engulfing candle, we can expect the bear flag measured move to come to fruition, which suggests a move back down to 520. In the ultra short term, be prepared for a breakdown of last week's low. If we see price start to break down, I'll be loading the 520 puts that don't expire for at least 2 or 3 weeks out to preserve delta. Conversely, if we see price continue to close above last week's low, then I'll get the 530 call options that also don't expire for 2 or 3 weeks out at least. To get our team's trades in real time, I recommend getting a 7-day free trial. I'll drop a link in the description below to Patreon where you can claim your own 7-day free trial. The 520 level incidentally is seeing a massive buildup in put options as traders bet on a bear flag measured move scenario, unfolding the days and weeks ahead. Looking at a weekly chart of the S&P 500, the picture becomes even more clear as you can see that last week, the benchmark printed a doji candle, meaning a balance between buyers and sellers. However, if we see price start to dip below last week's lows near the 524.72 level, then the scale tips in favor of a test of the February breakout near the 509.30 level. The monthly and weekly charts have been building a rather compelling significant bearish divergence between price and relative strength ahead. Although that can go on for some time, at some point it will weigh in on prices, with the rising 20-period moving average on the weekly time frame being at the 470 level currently. So if this thing decides to start rolling over, there is a lot of space below between the current price and the 20-period moving average. Thank you so much for watching, and if you found this video informative, please leave a like and subscribe, and share this video with your friends and family so we can all share the wealth. Until we meet again.